What is going on, guys? Nick here, back with another video. Zillow stock had a pretty rough year, dropping from all-time highs in 2021 of around $180 to around $50 today. Recently, the stock had a massive drop in November 2021 after they made a big announcement about their controversial home flipping program. The stock dropped by 36% in just a few days. But Zillow stock has seen a pretty good rebound over the past month, so I thought I'd take a look at what's driving the stock back up and if it's cheap enough now to buy. So, as I said during Zillow's last earnings report, Zillow announced their home flipping program would come to an end, causing Zillow to cut 25% of its workforce and miss its earnings estimates. Basically, Zillow realized that even though they provide Zestimates, or estimates on the prices of pretty much any home listed on the app, they found that the unpredictability forecasting home prices far exceeds what they anticipated, which is a little ironic. They also said that continuing to scale Zillow offers would result in too much earnings and balance sheet volatility. Basically, they had planned to buy houses with cash in a highly streamlined process. Then they would handle the repairs and renovations needed to improve the house's marketability and then work to sell the house. Well, the reality is, it's pretty challenging for an algorithm to mass buy houses under market value that'll be easy to fix up and flip for a profit. To really run an effective house flipping program, the person making the buying decisions needs to be well immersed in the area. And this is because they need to be adequately informed why a house on this block sells for this much while a house on this block is going to sell for less. One of these houses might be in a quiet cul-de-sac with well-maintained sidewalks, streets, and easy parking. The other house might be in a little more of a rundown block with maybe a homeless encampment right next to it that'll never show up on any map, and since an algorithm might only have 3 or 4 sales in an area, it probably is too small of a sample size to pick this out. So I just don't think that computers and algorithms have a big advantage over local house flippers. So Zillow has been working to sell off about $2.8 billion worth of houses since November. Bloomberg reported that last year Zillow had stopped buying houses after they found their inventory had gotten too big after they had ramped up their purchases during 2021. But during the latest earnings release in February 2022, Zillow jumped 20% after they announced they were getting out of the home flipping business faster than they had anticipated. Zillow said that it's working to refocus the business towards the marketplace and connecting buyers and sellers with technology to simplify the process. They expect the new plan to result in $5 billion in revenue by 2025 and 45% adjusted profit margins. Zillow's earnings reported a loss of 42 cents per share versus a loss of $1.24 estimated. Revenue came in at $3.88 billion versus $3.08 billion expected, so a decent beat on both top and bottom lines. So when we look at this earnings chart showing a full year of earnings reported by quarter, with the most recent earnings reported in red, we can see why investors were probably a little excited to see it. While it's not a great situation, the estimates for the quarter on this chart is the last bar in orange, and we can see that it was anticipated to be a much bigger loss. When we look at the past 10 years of revenue and net income for Zillow, we can see that while they did have a few quarters that were profitable on the previous chart, they still have yet to report a full year of profit. But this is a growth company right now, so that's not too surprising. Looking at the revenue versus expenses, we can see that the majority of their costs have been going towards the cost of revenue. Zillow defines this as the cost to run their website, apps, and what they paid to purchase and renovate homes in the home buying program. We can definitely see how as they ramped up home purchases, the cost of revenue became a much larger percentage of the revenue, going from about 56% in 2019 to about 78% today. Zillow breaks its business down into 3 segments: home services, IMT or internet media and technology, and the mortgages business. There's a few things that stick out almost immediately. While home services has produced the majority of the revenue, it produced almost no profit. In the last 3 years, they saw 1.3 to $6 billion in revenue, but they really didn't make very much profit, and even when they scaled up in 2021, they actually reported a loss of about $91 million that year. That thin yellow line at the bottom showing the mortgages segment actually brought in more profit while only producing about 5 to 10% of the revenue. But the real star of the business is the internet, media, and technology segments. This is where they provide services for agents, brokers, and other real estate professionals to organize work, track leads, and advertise on Zillow's platform. Zillow generates revenue on a cost per lead basis based off of the property's value. Since IMT is the majority of the profits and will soon be the majority of the revenue, this probably is the most important segment to understanding Zillow's value. Between 2019 and 2021, the segment's revenue reported at $1.3 billion to $1.4 billion to $1.7 billion, and profits grew from $1 billion to $1.2 billion to $1.6 billion, which puts revenue growth at 13% between 2019 and 2020 and 30% growth between 2020 and 2021. When we look at Zillow's forecasted revenue, we can see that over the next few years, they see a huge decline in revenue. But still, the current projections are for them to see profitability this year, with the next few years projected to see about $466 million to $869 million by 2024. Considering that the IMT segment is already seeing $1.6 billion in operating profits, this does seem like a pretty reasonable estimate to me. Now, normally I would look at the company's overall revenue and net income growth to value them, but I'm not really sure in Zillow's case that that's really the best way to do it. Instead, we know that the IMT segment was growing between 13 to 30%, and we also know that the home selling market in the US was extremely hot during these last couple of years, so 30% growth is probably not that likely to happen again, but I do think that we could reasonably use between 13% growth to 18% growth to come up with a fair price for the company. So 13% growth gives us a fair PE value of 28, and 18% growth gives us a fair PE value of 44. So when we look at this valuation charted out, if Zillow can meet its profit forecast for 2022 going forward and is growing at the growth rate that I expect, I think that Zillow is in a decent situation right now. There definitely is a lot of speculation about things that have to go right for Zillow built into this valuation. Their real estate services have to continue to grow, and if the housing market slows down as interest rates rise, I think that will make things a lot tougher for them. Over the past 2 years, the housing market has been really inflated because there's really low inventory of homes for sale. That trend is still continuing as January saw continued record low inventories. And I'm no real estate expert, so take what I say with a grain of salt, but this does seem like it should keep home prices up. Still, I am a little worried that as interest rates rise, it makes your mortgage a little more expensive, which in theory should push home prices down. Looking at the valuation, I do think that Zillow seems pretty reasonably priced, at least when you take into consideration all of the risks coming up for the company. So if you like the housing market over the next couple of years, then you might want to take a look at Zillow stock, because the underlying business, once you get rid of the home purchasing program, is actually doing pretty well. Now, before you go, make sure you check out this great video about a pretty inflation-proof stock that I have. And as always, thanks for watching.